Good morning, everyone, and welcome to the European crossover webinar. And we're seeing prices relatively steady. Euro seems to be trapped in this range here, although we did go in and take a dip, just barely sub 50 and turn around, just make a ramp right back up in here. You can see here with the euro. Once again, the ranges have been relatively tight. We were looking for the market to go in and look to back down close to this 1326, but we're hanging on fairly close up here. We'll see how the rest of the day transpires. Also seeing the dollar yen smartly rebound from those lows. Actually, well over 100 pips at this point. Looking at gold, you know that I've been looking for a move to 1390 here in gold in the XAU. We got that rally up to 1438, which is my level, or target. And subsequently, I'm looking for a move back to 1390 for those that want to go and get long. We'd had this rally back up in here. I posted there. There was a good short opportunity, technical right there. And then from there, we've been pretty much down, down, down. If you saw it on the daily wrap-up, I gave the case as to why I thought we would continue to break down because, you know, you break this fall and the market quickly buys it back up. Fantastic opportunity, fall back again. Market quickly brings it back up, fall back again. You get a little bit of a nice little bit of rally, but at some point you say, wow, how many opportunities are you going to be able to buy? If these are great opportunities, why does the market keep going lower? And as we break much lower, then you get into a range where people like anyone who picked up are probably willing to quickly jump out. And you may have had some other people that picked up on the way down that are in the red. So anyway, kind of laid out the reason why, not only from a technical standpoint, why I believe the XAU will go to 1390 and henceforth gold futures probably be about 1394. We do have data at the top of the hour, Eurozone economic sentiment and consumer confidence. That's going to be at the top of the hour coming up. We did get Italian consumer confidence, which came in at 109.6, which is actually lower. And then we do have German CPI. That'll be at 8 a.m. Eastern, followed by final GDP of the U.S. coming in at 8:30 Eastern. Of course, we have our usual jobless claims, a Mexican trade balance at 9 a.m., and pending sales at 10 a.m. with Kansas City Fed manufacturing at 11. But it'll be GDP sales and jobless claims as we come into the States. But then, like I said, preceding that would be the German CPI at 8 a.m. Eastern. And we'll take a look at the news. Investors are getting a foretaste of what a Boris Johnson premiership could look like with two colorful sound bites in 2 days, given strongly divergent takes on the chances of a no-deal Brexit. After Tuesday's do-or-die comment about leaving the EU on October 31st was widely interpreted as playing with the chances of a no-deal, Johnson yesterday described such an outcome as 1,000,000 to 1, citing what he saw as growing realism in Westminster and Brussels about the need for a compromise. Such seeming contradictions are a rhetorical device that Donald Trump has already used to go good effect in the United States, making it hard for opponents to target him and exploiting the fact that many voters don't appear to be worried by them. The same cloud the same could well be happening in the UK leadership races. Johnson and his rival Jeremy Hunt prepared for a new hustlings in the southern town of Bournemouth tonight. This is on the macro front today. We see the usual raft of inflation data from the individual German states trailing the nationwide figure, which is forecast to fall to just 0.1% on month in June from 0.2. World markets have turned squarely to the G20 summit and media reports of some truce in the U.S.-China trade will have lifted stocks overnight. The China Morning Post cited sources saying the bilateral meeting between the U.S. President Trump and Xi Jinping would agree to restart from formal talks and avert next month's planned U.S. tariffs rises on all remaining Chinese imports. While what may seem underwhelming compared with the groundbreaking deal expected only 6 weeks ago, it helped ease fears of a fractious standoff, even though the S&P 500 ended in the red. 4 straight sessions on Wednesday. Futures are up 0.3. First thing, European stock futures are up by a similar count. Even though warmer words were being spun by the U.S. China trade situation ahead of the G20, Trump's ire was spread far and wide elsewhere over the past 24 hours with broadsides against everyone from his own Fed chair, Powell, for not easing monetary policy fast enough, to European antitrust regulator Vestager for targeting U.S. companies, to India for its recent trade retaliation, to the withdrawal of the U.S. trade privileges. The dollar was higher across the board, however, despite Trump's repeated calls for the Fed to help engineer depreciation. The dollar index pushed up its best levels in a week, with the euro-dollar crossing 13.55. German and Spanish June inflation readings later in the day will give a glimpse of just how much leeway the European Central Bank has in its easing policy again. As it flagged clearly last week, sterling was a touch softer as the UK leadership hustlings continue with reports in the Sun newspaper of moves by factions within the UK Parliament to try and prevent a no-deal Brexit. Bank of England Chief Carney on Wednesday said the relatively upbeat bank outlook for the economy is still projected an interest rate over the horizon did not include the chance of a no-deal Brexit, but has affected market pricing to the contrary. Bitcoin retreated the first thing to 12,470 after topping 13,000 on Wednesday for the first time in 18 months, taking its gains for the year to around 200%. Partly on optimism about the future of cryptocurrency surrounding the planned launch of Facebook's stablecoin Libra. Yeah, let's see. And the dollar rebounds as hopes of U.S.-China trade truce. The dollar extended its recoveries on Thursday, gaining versus the yen. Now, of course, the euro had to pop right back up. The two countries have agreed to a tentative truce in their trade dispute. Hong Kong's South China Morning Post citing sources between President Trump and Xi Jinping. That's supported by the dollar, which has weakened in the recent weeks on expectations the Federal Reserve would cut interest rates and buying safe haven currencies such as Japanese yen by investors worrying about the trade conflict. The positive signal sent by the U.S. Side in the morning meeting weakened the safe havens, the Japanese yen and the Swiss franc. The yen, which has jumped to 5 months highs early this week, fell to 108.10. The outcome of the G20 is expected to influence the Fed, which opened the door to possible rate cuts after last week's meeting. If the two sides agree not to impose more tariffs, the Fed would no longer need to cut rates. On the contrary, if the talks point to an imposition of more tariffs that could nudge hesitant policymakers towards rate cuts. Despite the fact that I am not sure whether the conciliatory signals ahead of the meeting of the two presidents really resolve or solve any actual reason for the risk off. So, as I said, we're in a relatively tight range. You look here on, especially with the euro and actually cash dollar index itself. Although we did see the dollar CAD going and break somewhat lower, we've been targeting 31 for our overall target with the pause at 31.36. We're just kind of stuck in the middle, which is where our bias chart support was, which was 31.26 yesterday. We're looking here with 31.25 off 1 pip. Let's go and take a look here with the euro. And you can see here we're just kind of stuck here around this 1372. I myself expected us to be on the bid, which we can still be, and we were earlier. On the bid as we for the dollars, we get closer to the G20. So with that being said, I'm going to go and leave this bias chart support right here at 1324. And I'm going to leave the bias chart resistance at 1396. That will remain the same. Let's go and move into the cable. After retreating, cable's rather quiet also, you can see here. Just quiet as can be. So let's take a look at the 2 hour to get a better feel. Well, we had our resistance here, 2715. And that seems to have kept this market in check. So we'll keep the 2715. And let's see here. And 2644, we're just going to stay that. So these two are going to stay in check. No changes here for the euro or the cable. Let's go and move into the Aussie dollar. We consider to potentially move up a little bit higher. Looks like this is a day for not a whole lot of changes. So on the Aussie dollar, we had as low as 69.31, and probably going to want to move that up here to 69.44. And we'd move the, we have the resistance, we saw that coming off right here. You see that? At 70.13. Right there. 70.27 is that big level. We're not even that far from the 70.13. It's already had a pretty good run here. We'll go with 70.13 right there. Let's move this up a little bit higher. There it is. We'll go with 70.13. Or should I say we'll stick with it? And let's keep it with the Kiwi. We had 67.27 here for the Kiwi, and we'll take a look here on the 2-hour chart. That's a very good long stretch. So we're going to go with the 6709. And then we'll just move this up just a little bit higher up here, 6638. Already had a pretty good run. I know that they were, once we got past RB and Z, the thought was we could get up to 67. This has had a pretty good little run here. We'll, as I said, ratchet this down to 6709. We were, as I mentioned, expecting the dollar to be on the bid ahead of the G20. We'll see what happens. Let's go move into the dollar CAD. So we've been looking for a move down to 31. We can see here it says pair would need 2 consecutive closes above 32.95 to worry bearish. Next target is 31 even. So we essentially made it to 31 even. We were looking for a pause right here at 31.36, and our bias chart support yesterday was 31.26. Currently, we're right there at 31.26. Well, 31.258. But 31 was our overall target since the Asia analysis at the beginning of the week. You see that next target is 31. Let's take a look on the 2-hour chart. Right there, we'll just call it 31.11. And as far as resistance, right there, 31.85. Actually, it's, well, splitting hairs, but it's 31.84. And let's go move into the peso. That 1923.6 continues to be like bedrock. I mean, look at that. Just we've had, as I mentioned, a couple of stats. We haven't been able to do anything. Our support was 19.12.5. which is essentially where we're at right now. We'll go in and take a look at this on the 2-hour. So there was our bias chart support we're holding right now. We'll just go in and leave it there for 1912.5. No changes here on the dollar peso. 1912.5, which is we're just above that, and upside 1923.6. Let's go and move into the dollar yen. This one has really had a nice rebound, but then again, like I said, look how far we've fallen. We've just fallen so far, eventually coming down to that level, 106.76 that we're looking for. I think it made it all the way down to what, 107.78. So how much further can we push higher here in the dollar yen? Let's take a look. We already come a ways, but really right there was a good little target, 108.09. Let's just go with that. It did get above it, but we'll go with 108.09. I'm not so sure that it can make it up here to this 108.22. That might be a bit of a stretch. So 108.09. Downside, $767. And let's go move into the dollar index. Well, after coming to the 95.90 area down here, which confluence with 95.98, the 23% of the big range of 88.25 to 98.37. I'm still thinking this market will go bid into the G20. You got to be careful there. As I mentioned, I remember, what was it, 3 weeks ago? That was this move here, right here. Maybe it was 2 weeks ago. Remember, we fell down and we had our resistance level at 96.91 on the pop back, and the market quickly sank, and we couldn't get above that. And when we did get above, look, we couldn't even take out 97. And then we barely get above, we're hanging on, and then Friday, then whew, that thing just flew. So we can still see that, so you got to be cautious about that. So do expect the dollar to be on the bid. Obviously, acrimonious talk out of the U.S.-China situation could certainly push it lower, but we're certainly not seeing that at this time. But we shall see. What we had for our support was 96.04. Don't see any changes there. Upside 96.56. We did go and push a little bit higher here. We'll go and bring this up. So we finally broke above this 34, but and we're looking for 56, but so far nothing. We just barely got above it finally, and then we just rotate lower. So we'll keep that 96.56 here. And with that, we'll go and move into the cross rates. You can see here gold just hugging these lows. We've almost made it to 14. Almost. Not that far away. As I mentioned, I'm looking for a move to 1392 here. That's in the XAU. When the gold futures be looking at what 1390 is what I'm looking for. XAU gold future would be then like 1394 ish. Let's go and take a look at the New Zealand yen. Finally breaking up a little bit higher here. We're looking for 71, 72 even. We got to 72 even. We're still trying to push up a little bit higher. Let's take a look at this on a 2-hour chart. Yeah, let's go with that, 72.26. $72.26. And support 71.75. Already had a pretty nice run here in the euro yen. Obviously against with all the yen pairs. We'll go right there, 22.97. It's called 22.96, which they came pretty close. But it's been a good move. God. Right there, 22.25. And let's take a look where we stand here with the euro odd. A decent little pullback. Well, we had 62.50 and overshot that, not by a whole lot. Let's see, we got as low as. A little bit of an overshoot. So we got down to 62.26. And there was that 62.50 coming in right there. Nice little overshoot. So it's going to be 62.32. Upside is going to be right there at 63 even. Let's take a look at this Euro Kiwi. Our buy chart support held very nicely yesterday. Still holding 69.95. We've been as low as we've been lower, but not much lower, about 69.85. Be 69.90. We'll keep the 69.95. Well, we can move it. I mean, it's right there, 69.90. So we can move it to 5 pips, but this is pretty close what we had yesterday. And the upside, we've had a pretty good little run here with the Kiwi already. Upside is going to be actually right there. It's not even that far, 70.40. We have to work it just a little bit higher there, 70.50. 70.50. And moving into the Aussie yen. Let's take a look here on the 2-hour chart, see where we stand. We did exceed this 23% yesterday. Some decent volume comes in right there. Let's go right there, 75.66. Downside is going to be right there, 75.09. And move into the guppy. We're still making a stand, trying to hold here. Let's take a look where we stand here on the 2-hour chart. We did make a nice little move up in here. Boy, we stopped right there at that little level there, just before the bias chart resistance. Thought we might be able to stretch up, so right there, 37.33. We'll go with this 37.40, but it looks like they've gone as far as they want to go. Support will be right there, 36.65. And we'll finish up with the sterling nod. It's been a very quiet area, quiet session. It was quiet yesterday also. The day ended very early, and we haven't done a whole lot since then. 81.30, 31, and upside. Obviously having a tough time to even trying to grab a little bit higher. We'll stay with this. 82.22 or 24. So bringing it right back here to the main screen. As I said, relatively quiet. We did get the dollar index to finally poke above that 96.34, but not without much. I mean, we kind of pushed here and we've kind of dipped right back in here. I would expect, as I said, whether that comes to fruition or not, the dollar to be on the bid going into G20, but it's having a tough time. And I'm having a tough time here too. Also, one of the things that worries me, I don't say it worries me, but I caution, and I referenced it in the room. Like I said, we're into summer and the days are already winding down early to start with. So it didn't even have very much people in the room at the time. But the break in the dollar index, when we did have the rate cut, which is it's the same similar environment that we had, which was back in 2001, we had the rate cut on the first, I think it was January the 3rd, I believe the rate cut. Preceding the rate cut, the dollar index fell from 118 to 108. So we fell 1,000 ticks, okay? And now there's obviously things in motion. You saw the context, which I think is a little bit silly, but we saw they were saying, hey, look, well, if they do make an agreement, there's no need to cut rates. Well, they're still going to cut. The data's been weak, okay? But the difference would be it definitely would solidify a 25 basis point cut, which still there would still be some folks still saying you don't need a cut, but they would get the 25 basis point cut. I don't think they're going to get the deal. This is going to have to, they may decide to negotiate some more without the tariffs. That might be about as good as it gets. But that's been the concern, is that the dollar index, once it starts to roll, could really start to roll. And it's having a tough time moving higher. And if we can't get a bid into the G20, it really could open the door for us to push even lower again, which let's take a look at the cash dollar index. Got to think about how scary this is if you think about this. Now, we talked about this from 2 weeks ago. The market couldn't get up, couldn't get higher. And all of a sudden on Friday, the thing took off like a banshee. We're starting to see the same thing here. But the key is we've come down here at this 23% of the whole major area. And 95.90 is a good level. Now, I am looking for a move to 95.65. That can scare the market, but I mean, it's worrisome that they're not pushing. We're getting a little bit of a better balance, but we may get that going to Friday. We shall see, but the market's staying relatively quiet here for the most part. But that's about it. That's what we have here. It's a very quiet day. Here's the bias chart, and thanks for joining us here and on the European crossover webinar. We do have, as mentioned, the data coming out. You'll see that here. At the top of the hour, Eurozone Sentiment Index, Consumer Confidence, German CPI, inflation data, final GDP as we come into the States at 8:30 Eastern, followed by jobless claims. We do have Mexican trade balance, and we have pending homes sales here at 10 a.m. Eastern, but along with KC Fed Manufacturing at 11. Thank you very much for joining us here on the European Crossover webinar.